8, 7, 6, 5, 4, 3, 2, 1. Good afternoon, Quasar Markets Live. So happy to have Agnieszka Woods back in here, and working on us on how to sort of stay calm on days like today when everything seems to be going to the south. How are you doing today?
I'm very well, thank you. Thank you for having me again. Yes, indeed, it was pretty heavy weekend for I think most people, on the path of Helena. So yeah, the market is sort of like reflecting that, I guess, today.
It seems that way, between that, what's going on in the Middle East, a little bit of sort of doom and gloom here across the horizon seems to be weighing on the markets a little bit. But sometimes, just a healthy reset's not a bad thing either, where everybody just sort of, it's sometimes taking profits should be part of your day, right? And reassessing what you do.
Hopefully.
Today, well, what I wanted to go through today is one of the free programs that you provide or you offer people that I took advantage of, and I think it's fantastic, was
Thank you.
the 10 ways to improve consistency in trading. So I was hoping that we could talk a little bit about that today and that you could expound on it a little bit. And I have some questions and comments. How
Sure.
long, what made you come up with this list? Would be my first
You
question.
know, this was actually interesting because this was the very, very first list actually that I prepared. Um, when I started as a trading mindset coach, it was sort of a new arena and for everyone, and people were asking me, "What is that? What does the trading mindset coach do?" Right? So I was just trying to prepare something that's relatively simple for people to understand how they can change things, just making small adjustments in their trading from the mindset perspective that would be really understandable for them and not like, some mumbo jumbo psychological therapy sessions and stuff, but something really simple that would show people if you make those small adjustments, you can see change in your results. So
I agree.
that's
In reading
where we
it, you make
started.
it very simple to understand. Like you said, sometimes it is so overwhelming when you're trying to either A, learn a new system or a new thing from technical analysis standpoint. You can get lost in there.
Right,
So this, I
right.
did think that that's one of the first takeaways I would have is these are things, and these are also things that I saw that it doesn't take, a huge change in what you do. You're sort of telling people how to get their lives set. So let's start right there with number one,
All
and
right.
ditch your clutter. What do you mean by that?
Yes, less is more. This is just my personal life philosophy, but in trading, it just made a huge difference. I fell into that, thing as a lot of new traders fall into, trying to put as much on their charts as possible.
Right.
Uh, to me, it looked fancy, and I thought, okay, if I'm a professional, I'm going to be professional trader. I need all these indicators, and I had stuff that were like contradicting each other, and I didn't really even understand it. Some you really have to understand what is it that you are looking at, and I think a lot of people do that just because they think they have to, but
Sure.
trading is already very complicated thing, and there's so many things that you need to pay attention to start with, but also simultaneously analyze. So I think if you just go back to basics first and try to minimize the things that you see on your charts that you are trying to analyze, and you can always add later. You know what I mean?
Sure.
Just start small and then start build from there. Don't get too overwhelmed by, oh, okay, but this guy has all these indicators and it looks cool, and look at me like,
Right. If
right?
you don't understand how to use them, it doesn't help. And my
Yeah.
other takeaway from that I thought was outstanding was, when you take some of that stuff off, take off stuff that you've drawn. A lot of times I'll put
Oh
in
yeah.
zones that I'm looking at or triangles or this trend line. And what I
Right.
start to do is convince myself that I have to reassure what I wrote last week was correct, as opposed to, wipe it out and start again. You might draw the same exact thing. I did that today, and I found it very helpful personally. So I wanted to thank you on
Very
that.
cool.
And I thought that was even more of a takeaway to me on that ditch the clutter was, hey, listen, sometimes we get drawn into that world where we don't want to admit that we're wrong, and
Right.
we follow that same chart, whether or not it's right or wrong. We're going down with our foot with it, so to speak. So I really took that as a takeaway there. And like you said, less is more, which is your second step. I agree. I was one of those people I would follow, and I'm guilty. I work for him now, is Steve. And Steve has, 700 indicators on some of his charts. And I would put this stuff on, and I realized after about 6 months, I took off the ones I don't understand. I had things on there I had no clue how to read. And I'll be
I
honest with you, MACD was one of them. Like, I know what it means. I understood, like, the actual workings of it, but I didn't understand how to trade with it. So, after a
yeah.
while, I realized, take it off of your chart, if you don't understand it. So, those are some really good ones that I thought right off the bat that you hit on.
Yeah, and sometimes you put something on and you think like, okay, this is going to help me, but then if you really go through the process, a kind of a protocol, right? Like standard operating procedure of your trade, like you check the market, you check this, you look at the different time frames, you are making sure that your MAs are in the right spot, etc. Then you might notice that you actually never really need to look at something that is on your chart. And like, why is it there?
Right.
Or that you
Yeah.
actually look at that, but it doesn't give you the information that you need for the trade. So then
I couldn't
then you
agree
don't need
more.
it either.
Yeah, yeah. Like you said, it just stands. It almost stands in the way. It overwhelms you sometimes. As you start to
Right.
second guess, triple guess, and everything else yourself.
Yes, I
Um,
tell you, like one time I look at someone's chart and I was like, I can't see the candles. How
I
I'm
actually
like,
have
where
one.
are
I'll
the
show you. My
candles?
my short term is like that. I have it actually up. This one over here on the right. I'll make it a little bigger so you can see. But
Uh,
oh, it's good. It's my day chart came up. Is because of the fact that it uses this MA, EMA waves. Sometimes you
right,
can't even see what's going on. Like you've got to really know. Now I know visually what it means, and for me, it's so
right,
that I can visually just look at a short-term chart. Green is good, red is bad, so to speak, and it shows me that. But you're right. You can cover up half your chart and not be able to see through the woods, so to speak. Right?
right.
Is the way I
For
put
me,
it.
like when I the what really made a difference is when I cleared my charts completely. I like stripped it down from everything, and I only had candles and the volume. That's where, after my 2 years of struggle, I went there and I was like, let me just see how is this price moving?
Right.
What is it doing? And I started from there. And actually, the only thing that I added at that time were trend lines. I started drawing trend lines, just the lines, and I would adjust them all the time because as I went, of course, throughout the day, the lines would change, right?
Yep.
So I would feel like I am actually up to date with the price action and not getting stuck on something. And then later on, I added one MA and saw, okay, is this really helping me? Does it give me any information? And that way you build for yourself that system that you feel comfortable with and looking if like, does it really add value to what I'm trying to do here?
Absolutely. I think that's a mistake a lot of people make too. Is you hit on the head. One of the things that took me a little while to get down was looking at how an individual indicator does it work, does it back up what I want, does it provide actual input, or is it just a line on a screen that doesn't actually affect the way that I trade. And then you
Right.
you start to get down. Like I said, I think every trader goes through that metamorphosis where you start off with no indicators, then you get way too many, and then you get it down to the right mix for how you trade
Yeah.
individually.
Yeah. I like to compare like as if you would walk a slack line or do something that gets you sort of out of balance when you start, or even riding a bike, right? You first have those extra wheels on your mounted on your back
Sure.
wheel because you feel like all these things are giving you extra support. But as more you go into it and the more confidence you get about your system, about your setup, about yourself, you feel like, okay, I can just drop those wheels. I can drop someone, pushing me behind and holding me. And then you kind of go on your own and okay, this is the support that I need, right?
Right.
But you need to build that confidence first.
Absolutely, absolutely. The third one that you have on the list, one day stand, is one that I think a lot of people make mistakes in not doing. So we want to go a little bit more into that for me.
Yes. So I've heard the metaphor somewhere, or metaphors, someone talking about, coaching people in tennis. Never think about the previous ball. Every ball is a separate thing, right? It's a separate swing, and you always have to focus on that particular moment. So when you struggle and you keep thinking about, your previous trades, and you kind of get yourself hooked onto that, it just disturbs your progress because you scare yourself that things might happen again. And also, what is easier to do is when you, so the one day stand in this case is, if you, let's say you have your watch list, right? Just stick to it, stick to the positions, maybe two or three, maybe even one at the very beginning, is so that you can learn how it trades, that you have that you get this idea of, oh, okay, I understand. I see the levels, I see how it's moving, so that you kind of marry it for a day. you know?
Sure, it makes sense. Is that's a big mistake people make too? Is there is 9,000 stocks out there. You don't have to trade
Right.
them all, and there's a reason that at J.P. Morgan or at Bank of America they have an analyst that covers one, two, maybe three companies, and that's it. It's because
Right.
you
Right.
learn those levels. You get a familiarity to how they react to certain things. I know for me, Bitcoin's like that. Is I can look at it and say, okay, I think this is how it will react today, and it's amazing how many times I can give you the pretty much the range of where it's going to trade today and things like that. So I do
Right.
think that's a
Right.
huge takeaway.
And
That's
another dimension of that is, also to, like, when you decide to be a day trader, be a day trader. Close your positions, even if, especially if they are in the min when you are ending the day, and don't hope that the next day it will be better. Out of
right.
experience, I can tell you 80%, maybe even 90% of the time, it's not getting better. There is a reason why you're ending the day in the min.
Yeah,
Apparently, it
absolutely.
lost
And
the
if you
level, right?
Yeah, and if you're a day trader, that you're exactly right. There are people who are swing traders, there are people who are long-term traders, and they're looking at different things and they're accounting for different things. You
Exactly.
don't do that, and pre-market and post-market hours can be very sort of irrational and move needles. I can't tell you again exactly how many times I had a strong winner at the end of the day, and I said, you know what? I bet you tomorrow it's going to be even better. And I wake up
Yeah.
and 7, 8, 9 points are gone off of a trade.
Yeah,
So
and
I
you're
do.
already behind, you already feel that, like, and then the market opens and all you have to do is just manage that position and trying to figure out, are you going to get out? Are you waiting for pop? Are you going to cut it, right? But I can tell you, cutting it then it's really difficult, at least from my experience. It's
Yeah.
very difficult because you had that profit maybe
Right.
the
It's going
day
to come right
before.
back. That's
You don't want
that's
to
where
start
people
the
get in
day with a
trouble
loss.
because that's where people start to double down, and that's where people really get themselves
Yeah,
leveraged in the wrong area there. So that's the other reason that I do it. And then what I like is it goes back to number one. What I liked about a lot of these is they're tied in. And if
yes,
you do that, then when because again, what happens, I find myself, if I have open positions in the morning, I'm starting off with a bias one way or the other based upon those positions. So sometimes
right,
it's great to reset and let yourself start off each morning on a neutral part and let the market play out in front of you. So that
right.
was another takeaway that I got there. The next one was safety first, and I think this is important for people. And I found this out the hard way in the crypto world. That's a 24/7 trading area. So
Yes,
your safety first with and I'm going to take the lead on this one a little bit, is if you are in a trade, you need to have it set up. And I talked about this with you the other day, is I'm big on having your take profits and your stop losses loaded in when you make your trade. And the reason is you're number 4. So now I'll let you take over.
Yes. It's very like what inspired this one was that I hear from a lot of traders excuses why they are in a loss. It's either the market or someone called them, or they just turn around for a second, and then,
Yeah.
and I'm like, yeah, that's the whole point. This might happen. You got to protect yourself from those situations, not hide behind them, because just by hiding behind an excuse, you're really hurting just yourself, nobody else. So
Absolutely.
instead of finding an excuse why you are losing, or took a big loss, just take the responsibility and realize that it is up to you to protect yourself from those. Anything can happen. Like the power might go off, right? You
Right.
might not be able to log into your platform. It's like, what are you going to do then? What about you cannot call your broker? It's like all these little things that I think I also learned along the way. Sometimes things just happen that you don't expect, and then you have to ask yourself, like, what is that going to do to my capital? Because if you want to come back the next day, you still need the capital. It's not
Absolutely.
just
You can
about
never
today.
run out. If you run out of firepower, you're all done. You have to have
Right,
ammunition
right.
every day. Yeah, and it's so true. Is it is always that way. The one day the one time you turn around, you go to lunch, you do whatever it is, you take the dog for the walk, that's when Jerome Powell gets up to speak and the whole market turns or whatever it is. So that's why, and what I would say from an educator's point there too, it's not hard to do. It's one of those ones that, like you said, you get frustrated when you're talking to your client, and that's the excuse. Because, you
Yeah.
say, listen, I gave you, from my side, when I used to be an educator at Prosper, we would give you all those marks. So, in other words, you're buying it at X, and then you're taking profit at Y, and you're going to have a stop loss at Z. And they're there, we give them to you, we do that extra work for a reason, is so that in case of volatility and everything else for new traders, you're able to do it. So I think that, again, you hit on so many important spots with these 10 things. Number 5, halftime. This is a really good one that we talked about a little bit on Friday, or last Wednesday, excuse me, about is, to me, this is sometimes sit on your hands. So if you could go a little bit into your halftime.
Yes, sit on your hands, and also make sure that you take a break. And I know that it is very difficult to walk away from the screens. The screens are very enticing. They will tempt you. They will want you to be there all the time because, yeah, the price action is, it's an action, and you never know when it might start moving. It's really something that pulls you in. But being in control means also that you decide when you trade. And walking away has a very important function for your nervous system and for your whole physiology. You have to just imagine how much information is coming at you when you are watching the market. When you are in a trade, now you're exposed. Now you are exposed to risk, possible failure, which, I know for many people has a huge impact. Um, the market can slap you in your face any moment, right?
And it will.
And it will, absolutely it will. And you have to be prepared for that. But you have to also understand that your nervous system is on the, like, it's working at the background, right? It's constantly working, trying to help you, trying to, like, you got to help it to regulate your emotions. Like, you are exposing yourself to, I like to call it G forces, right? I think I
Yeah.
mentioned it, blue angels. So if you walk away, even if it's just 15 minutes, and take a few deep breaths, maybe go for a walk, maybe meditate for 10 minutes, or just simply just walk away
Yeah.
and give yourself some rest, it's so important for your nervous system so that you can reset and then come back. I even advise it when you had a great day. especially when you have a great
Absolutely.
day.
That it's
So,
probably more important there because people overtrade. That's when
yes,
people tend to overtrade the
yes.
most,
And it's
in
not
my
easy
opinion.
to walk away then, right?
Yeah.
Because you are so enthusiastic. You're like on fire, invincible. And that's where things go wrong. So just be aware that, there's so many different chemicals produced in your body that makes you want to stay. And that's when you should walk away. It's just like,
Yeah.
at the party, you want to party more, but then that one extra drink might break the whole fun.
Yeah, because that's going to come back to haunt you tomorrow. The same with your trading.
Exactly.
Absolutely, and do you have any tips on like taking it at the same time of the day, or is it more how the market plays out on an individual day?
I think it's a little bit about your routine and your resilience, how resilient you are. Like you should like when you observe yourself, how easily you get out of balance, right? How easy
Right.
you get into that zone. And when I on my website you can I think it's on my website. Anyway, one of the resources that I have is also like kind of a worksheet where you can mark yourself where you are in your zone. Like, are you still neutral, or are you invincible, or are you completely down beating yourself up? Because if you see where you are, you can like, okay, I'm still neutral, I'm regulating my emotions well. And but if you feel like you're shaking and you're like, oh, I need more, and yeah, that's definitely time to walk
Step
away.
away. Yeah, yeah, and that's it's we talked about it. I always look for a good poker player. Sometimes makes a very good investor, especially a day trader, because they get those ideas. Is yeah, you want to run with the run, and you want to run away from the when you're doing bad, but it's also and I think part of it too is it's a 24/7 world nowadays. These
Right.
futures and stuff are trading around the clock. Individual investors, retail trust investors used to be locked into pretty much 9 to 4, and it gave you a decent break. That's not the
Yeah.
case anymore. It's a 24/7 news cycle and it's a 24/7 trading cycle. So
Yeah.
I definitely find that you have to step away. And I think part of that goes to your next one, which is tune out the noise. And I don't know if we're supposed to say this since we are now a little bit in the side of the media. But that has to do a little bit, I think, with Main Street media and all of the inputs we get. So when you
Yeah.
say tune out the noise, what do you mean?
Yeah. I actually want to connect that first
Sure.
before we go to that news and media, to the previous point and walking away. Because yes, even if you say, okay, I'm only trading till, I don't know, 12 or till 4, and you think that you are walking away from the screen. Now the question is, are you also walking away in your head?
That's a
Because
great, great, great point.
there it's constant, especially when you are struggling in trading and you are trying to make it and pushing, and it's not really walking away. You are still busy. Like, how many times traders take it to their dinner table,
Sure.
their trading day,
Yep.
right? So really tuning out the noise is one thing, to tune out the noise from the outside, because it's really about you and focusing on you, your process, and it doesn't matter what other people do. Never compare yourself to other people.
Okay.
um, you know that news are already discounted in the price. You're hearing the news, it's probably already, it's like when you hear the news have happened already.
Right.
It's
You're just
not really
exit
the
liquidity
news.
at that point.
Right. So the what really matters is your plan. Like, what is it that you have planned for that day? When you follow your plan, it will be easier for you also to disconnect at the end of the day, because even if you have finished the day red, you can still see, like, but did I follow my plan? Knowing that if you do, long term, it's going to work in your favor.
Absolutely. Absolutely.
So if you hear all the noise from outside, especially if you compare yourself to other traders, and that's like the worst damaging thing, like you see people making money left and right, right? It's just, it's another trigger that you have to deal with.
Right.
So you get so much triggers thrown at you, and now you have to deal with that. the first thing that a lot of traders feel is like, what's wrong with me? Why are they all making money but me?
Right.
Right.
Yeah, no, that's what you think because you look at it, yeah, and as you know, because social media, people put the good much more than they put the
Yeah,
bad. It, makes that echo chamber sort of come out. I love what you just said is that it's almost first tune out the noise within, and
right.
then you can talk about the noise on the outside that's also getting in the way. And I think you're right. For me, it's I take the dog out, we play fetch, and I get so focused on what she's doing that you're not thinking about the trade.
Right.
Yeah, if you're just leaving the room, but you're going to sulk in the basement, so to speak, that you just
Right.
had that terrible trade. That's not a halftime. That's not a break. I think what you're saying, and what you've reinforced is that taking a break is actually giving yourself a mental break from the markets and sort
Right.
of disconnecting yourself from the market for a bit.
Yeah. And in one of my interviews on my podcast, when I interviewed Brett Steenbarger, he actually said something really so powerful. We were talking about freedom, and it was very it was on Independence Day, which was fantastic. And he said that if you are not wealthy already, trading is not going to make you wealthy. And putting it into this context is, if you don't have a rich life already where you can get fulfillment, where you feed on, trading is not going to fulfill that void. So you can
Right.
only really, it's really the whole thing. It's like a lot of people really think trading will make their life perfect and whole. But that's not the case, because you have to be already fulfilled in your life and be able to switch from your work day, which is trading,
Right.
into your life to get fueled again, so that you can come back the next day, instead of thinking, oh my God, trading is the only thing that needs to fuel me, and I just had a terrible day, so now I'm a failure. Now you feel like a failure also in your private life. So there has to be a balance.
Yeah, without a doubt. I mean that, like you said, that's very important. Without that balance there, it's just out of whack. And even in the good time, you're not going to be happy even with the wins.
Right.
If the only thing you have is the market,
Yeah.
it's just too, it becomes too hard, overwhelming, when you
Right.
do it that way.
Right.
Um, yeah, without a doubt, that definitely, it's hard to shut it off, for traders. It really is.
Yeah.
And I thought your other one that is good, a great point is everybody is different. Everybody's mentality is different. So what might work for me going out with my dog is not stressful and is fun. For other people,
I know.
that can be more
Right.
stressful because their dog's running away and not listening or whatever else. So it's finding what works for you. I think is important there. That is it.
Yeah,
Is a good
and
term.
it's also the question, I think maybe we have talked a little bit about last time about like the why you're trading. I put so much focus on that in my programs and with my students, my clients, coaching clients, um, because when you start trading, a lot of people say that I want to make money, but there are so many better ways to make money,
Yeah, that are at
truly.
least more consistent and more,
Right.
trust, what I mean, the more
Yeah,
trackable. Like in other words, if I work for X, I know that I always get paid at the end of the day. You
more
can put in,
reliable, right?
12 hours here and lose money.
Yes, if you put the effort, you are, it's not the probability whether you will
Right.
get paid or not. In trading, you never know, right? So there is this extra dimension where you have that insecurity and vulnerability. Um, but there has to be something more why you are trading, and it is not the objective. I always say the money is not, should never be the reason for your effort. It's the result of your efforts. So
I
just
love that.
focusing on the money is not going to get you there.
Right.
And unfortunately, the money is the product that we are trading, because you're constantly confronted with the money. So I always suggest try to see it as a resource. It's like,
Right.
people are selling bread, people are selling candies or cars or whatever is the product. Just see the money that you're seeing every day there, your capital. That's the resource you are dealing with. And now, depending where you put that resource, the money has to work for you. So
Right.
when you are taking a loss, when you are putting a stop loss, just realize that this is your protection that tells you this investment
Yeah.
is not the right one.
Right.
So I have to take my resources out right now, and now I can actually use them more efficiently and effectively into another investment, even if it's a day trade. It doesn't matter. But it's really, it's almost like a signal, like like you put the alerts
Right.
on. Okay, time to switch the investment.
And that's an important one to tell people because they often mistake that. They don't understand that the most important thing is your preservation of your income and of your
Yeah,
resources. And if you don't watch that, you can lose it all in one trade. And
yeah,
sometimes, and the other part is, it's a lot easier to recover losses in a different spot than where you lost them. And what I mean there is when something goes down 75%, it doesn't usually go up 150 to get you to where you need to be, so to
yeah,
speak, for it to be worthwhile. Reinvesting those in a new stock that you think has a better thesis now and that has more opportunity is, that's again, everything we do as small retail traders should follow what the big boys are doing. And I don't mean that, they're, but risk mitigation, hedging strategies, knowing when to take a loss and moving on and
right.
realizing that you're going to better allocate those funds somewhere else is what they do. And that's why they're still open, and why
Yeah.
so many retail traders don't, because they don't learn those lessons.
Yes, and you know what I think the reason for it is that um, they understand that mistake is not a failure. I talk to so many traders that are afraid to make a mistake, and the loss is for them a mistake. And when they make mistakes, a lot of people think if I make a lot of mistakes, I'm a failure. So then they are afraid to take a loss.
Right.
But if that were true, that would mean that every successful person is a failure
Yeah.
because the way that they got there was by making mistakes, right?
Right,
And
and no
learning from
one's
them.
1,000%. Anyone that tells you that, it's like I always laugh is the person who said, "Oh, I sold at the exact absolute top." No, only one person did. There's only one person that made that trade at that tick that was the highest, and the same thing on the other side. Everybody else, we were just areas of gray in between.
Right.
So, and it's important sometimes to take that emotion out and realize that, that that's the case is that that's where it is sometimes that people go down with the ship. I've heard too many traders say, well, it's not a loss till you sell it, and that's not a good way to look at the market. It's the way
No.
that you're usually going to crash out, unfortunately.
Yeah, I'm
um,
laughing because I've been there.
yeah, no, I mean, we all have.
Yeah.
And what goes with that is that I think your seventh step here, no list, no shopping, is I can't tell you the amount of times that I will get in the message boards at the different groups that I work for, or even with professional traders. Just people like, what are we trading today? What are you doing? Don't ask other people what they're trading, so to speak.
Right.
That's what I took from this. So, you're no list, no
Yeah.
shopping. What do you mean by that?
If you are not prepared to trade, whether it's just a trading plan, but ideally also mental preparation, then you just don't trade. It's it's just too dangerous. Like you're exposing yourself to risk unnecessarily. So if you, let's say, I don't know, you couldn't prepare last night, you really don't know what to trade, and you don't have a list of what you are even watching, and you're like, oh, let me just wing it.
Yeah.
Well, if you do that, just realize that you are actually might lose money, right? So if
Yeah.
that's okay with you, fine, by
Right.
all means.
Which we know it isn't. And,
Yeah,
and the other way that I always look at that too is, without if you don't, like you said, without a shopping list, you don't go to the store. You don't buy a stock unless you have a thesis to why you're trading it.
Right.
Just because it just popped off on CNBC isn't a reason, And again, don't get me wrong, people have scanners that are very, intricate. And if your scanner goes off and it says trade stock XYZ, well then by all means, I'm not saying don't trade it there.
Yeah.
That is your shopping list. Your shopping list is your scanner. I always also
Yeah.
want to explain that to people because I know Steve has that in his 10 rules of big B trading. And I think people sometimes get confused because they think then that you have to be thinking about an individual stock for days, weeks, months before you actually pull that trigger. That's not what we're saying here.
No. And I think so a lot of times, like especially when you are in a chat room somewhere or trading room, right, or you look on YouTube, you just have to realize where are you in terms of your resilience and your ability to trade. So yes, there are traders who can do that. And if you can do that, that you just pull up the stock pops up on your scanner, boom, you take a glance on the chart and you're like, yep, I'm going to do this. I exactly know what to do. Fine. But a lot of traders, they are not there yet. And you have to ask yourself, am I the one that is at that point? Because a lot of times when you don't have prepared, that you haven't looked at the chart before, that you know the levels, and just some random stock pops up on the chart, you might just not feel confident enough. And even though you might get that stock, like just someone in chat room, your ability to manage the trade
isn't going to
might
be
be
there.
very different. And, they might already long be taking profit and you are messing it up and wondering, why am I losing? They are all making
Yeah,
money on
without
it.
a doubt. Yeah, I guess I should also sort of elaborate a little bit. When I say that, I'm talking about a screener or a scanner that you've put together that is set up based
Right,
upon your
right.
indicators, your
Yeah,
technical analysis, how your eye is. In other words, I'm
exactly.
not from a chat room. When I'm saying that I will still follow a scanner, it's following again. It is coming off of my shopping list, so to speak, because it's
Exactly. So
hitting the
you know what
parameters.
is it? Why is it
Yeah, when I
triggering,
pull
right?
that trigger to buy it based on the scanner, I know exactly the fact. I'm looking for the following follow through, and if it doesn't follow through this way, the trade gets stopped out at this level.
Yeah,
Yeah. Yeah, I'm not
exactly.
talking about just somebody else's idea. When I say a scanner, I mean my own scanner that's set up to my own
Right.
technicals and things
Yeah.
like that.
And the reason why I call it no list, no shopping is because I don't know about you, but if I go to a store without the list or like prior preparing myself what I'm going to shop, I will buy like so much
Oh
more
yeah, I'm
than I
coming
need.
home with a full cart either way. It's just a matter that then I get home and I have to go back out to get the 7 ingredients that go with any of the things that I bought to make an actual meal.
Yeah, and
I
that happens also in trading, because now you go in there and it's like everything is moving. So you're like, oh, and I want this and this and this and this and that. And it's like, okay. And now you are in 7 positions. How are you going to manage them?
right,
Right.
and yeah, exactly. Or you end up too top heavy and for one reason.
Right. Right.
Which is important too, and I think it goes to your eighth one there as I go back is take it small. I see way too many traders that have 12, 13, 14 open positions. You
Right.
know, again, somebody who's a professional at this, who's been doing this a long time, I don't leave that many trades open at any given time. It's too hard to manage them, to keep them all going. So when you say take it small, what do you mean by that?
Um, it's actually really funny. I just noticed that take it small is on the index, but in the guide, it's take it slow.
Oh, really?
Which it doesn't matter because it's actually it is about both. It is about quality, not quantity. So take it small is pretty much the same thing. So first of all, you have to know what type of trader you are, right? Like what suits you, what type of time frame, what type of even trading, whether it's swing trading, scalping, or whatever is within your personality, how you what is fitting the best to you. So if you want to make a lot of money, usually traders would just put a lot of quantity and think, at least I did that. I don't know about you guys. Maybe
Yeah.
no one is doing it. Maybe it's just me. I don't know. I was thinking, if I take 1,000 shares and I just need this small move and I make $1,000, I would really talk myself into it. And then, of course, that was based on hot air. It was just based on a dollar sign in front of my eyes. And then I would lose $1,000. But then I
Right.
would lose actually more because I would not want to lose $1,000 because it was $1,000 at the
Sure.
time for me.
We get stubborn again.
And I would wait and wait and wait, and I would lose $5,000. So instead of making that 1,000 that was supposed to be easy.
I
So
I do have a
take it
question that's come
slow.
up on our YouTube channel here asking
Okay.
that they have an issue of taking profits too soon. How do they get more
Mm.
patience or how do you suggest to learn patience for more of a long-term trader?
Yeah. So is it on a daily or is it like a swing trade or is it a day
Looks like a
trade?
swing trader, if I had to
Swing
guess.
trader. Like, first of all, how do you define your targets? I would say review how you define your targets. Because um, if you have a plan and you think, okay, this is a reasonable target where I'm going to take profit, then you can trail your stop
Yeah.
and say this is the amount that I am willing to give back if the trade turns around, because you never know. But if this is simply because of your fear and that you are telling yourself, oh, I already have that profit, it's, I cannot stand the pressure of having that money already made and I'm getting out of fear, then it's the mindset issue, right? Then you really have to put your attention on building the resilience. And it might take, a few times to talk yourself. It's really a lot of the self-talk skills that you use in order to talk yourself in staying in a
In the trade.
trade because of your plan. So that goes, of course, with with the belief in your strategy. Like, how are you defining your
Yeah.
target? Mm.
And that's what I always tell people from my side. I would have been right where you just said. Does your thesis still stand? If your thesis
Right.
still stands, then you don't exit the trade. Putting in a trailing stop loss is never a problem in my opinion too. I always feel that you got to cover yourself, and especially if
Yeah.
that's how if you find that you have too much fear of losing those profits, then protect them with a trailing stop would be exactly what I would recommend.
Right.
And but then following through to your thesis would be the way that I looked at it, I think, is what you just said, is trusting yourself, talking to yourself, having that plan that you just said, and then now
Yeah.
just following through on that plan.
Yeah. Just ask yourself, like, how am I shaking myself out of this trade? So just
Right.
notice how, and journaling is a great tool for that. How am I talking myself into exiting that trade? Because I can tell you, I've been actually recently, I had this discussion with myself. I have a swing trade on that's CBNA, and sometime last week, it reached over 50% profit, and it still looks great. I
Right.
mean, I cannot, the chart still looks good. It's trending, and I have bought it for long-term profit, and I have, it's still a little bit to go to my target. And I had this conversation with myself. What do I do? So it's really a matter of what will you be more happy with? Like,
Right.
what if the market turns around and it stops you out, or and you take actually profit, and then when it continues, you can always get back in, right? You can
Yeah,
always get back
and that's
in.
what I always tell people: never be upset. That's a good problem to have, so to speak. As I used to say, if you're asking me that in our room, it means we're doing well. If you're
Right.
worried that we took it off a little too soon, we protected ourselves, we took profits. Never be
Yeah.
ashamed. And what you get is those people sometimes that say, well, you can't go 10x if you don't go 4x and all these others. And what
But
I
I can tell you, if you wait and the market does turn around, because it does happen, and you lose 50% of your profit that you already had,
right. you're going to
That
beat
hurts
yourself up
more.
much more than
Yeah,
the other side of it.
for
That's how,
sure.
like I said, sometimes, I like the way that your 10 matched up with Steve's 10 rules, because that's one of his also, is that, don't beat yourself up because you decided to take profits.
Right.
Because there's usually, and I think some of the things that you say with mentality and talking to yourself about it and others comes through in that. In other words, where another one we always talk about, if you're too worried about your position, then your position's probably too big,
Right.
and sometimes cutting it a little bit is an answer. Is you don't have to sell everything. It's not always, it's not black and white. Again, like I said
Exactly.
recently, there's that area of gray. And, for me in the crypto world, where things, especially back in 2020, when things would go 10, 20, 30, 40x at different times if you caught the right thing, what I would do is I would pare back down and I would teach my students and say, hey, listen, you were happy buying, let's say, $100 of Ethereum the first time. Pare it back down to $100. Take the
Right.
profits off of what you made if it went 3x or 4x. You were happy a week ago owning $100 of Ethereum. Why would you not be happy today to own $100 worth of Ethereum?
Right.
So, there's different ways to look at that, and I think that you hit it, especially from the mentality point. Don't be afraid to talk to yourselves. To say, where am I in this trade? Does it
Yeah.
still hit the thesis that I had?
Yeah. And that kind of goes into the point 10, which is go ahead, meaning be the leader.
Right.
So you have to you have to remember you talk to yourself all the time anyway, whether you know it or not.
Yeah.
The problem is that you usually repeat the same stuff that you did before, that you have experienced or based on your experience, because that's what your brain knows and remembers. So it associates everything with the past. So if you want to do something different, you got to change that self talk to present to yourself new possibilities and new way of behaving in your trading. And yes, it might cost you, a little bit of effort to not act when you want to,
Yep.
but with talking to yourself and being in that position of the leader where you understand, like, I need to be ahead of all these triggers that are coming at me. So, again, the best way to find out, like, what is triggering me, so I am not just reacting to those triggers, is journaling and building that self-awareness. I think it's such an important part to build awareness of how am I doing what I'm doing? Like, what is happening here that I am making those decisions, especially under pressure, right? Because there is so many things that are happening in the background. And if you're not aware of it, you are just playing a program. You're just like, program machine and just
Yep.
doing the same thing as before.
It amazes me the amount of traders who make the same mistake day after day that I see, that come to me then and say, how do I trade out of this now? And that you see get into the same, rut of mistakes, like you said. And like you said with this one is, if you do the first parts of what you said, you should always be doing 10. Don't get me wrong, getting advice from a trading professional, getting advice from trading rooms or everything can be part of the process, but it shouldn't be the entire process. If you
Yeah.
don't take control of your own trade, we individually put that finger that says buy or sell.
Yeah.
And, I think it's important. I don't know if you do, but I'm always telling my clients that ultimately you are the one that's trading. It isn't
Yeah.
my money. You have to make those decisions and be comfortable at night.
Yeah, moreover, I actually train my clients to be their own coach because, first of all, I don't want them to be dependent on me. I want my freedom too. So I
Absolutely.
want them to be able to go into the world and be able to coach themselves, because that's how they can actually have their freedom and trade independently, not just by, being stuck with me and like tell me what to do. That
Right.
doesn't make any
No.
sense.
Yeah, we teach, and the same thing. When I was teaching trading, I was teaching people to trade, not to follow my trade, so to speak. You know what
Right.
I mean? Is
Right.
well, and that's what you have to do. You have to develop your own style. I think is my big takeaways from our talk today is that take ownership of your own trades, be prepared for your own trades, and also have that ability to disconnect from your trades.
Yes,
I
letting
think,
go, big part of it. Letting it go both ways.
yeah,
Disconnecting when you're not in it, but also disconnecting when you're in it, because the biggest problem is us. We stand in our own way.
we're our biggest
We
obstacle.
create
I
the
couldn't agree
resistance.
more. And what I love is that what we just went over works in a bear market, a bull market, a high volatility, a low volatility. There aren't many other educators that I'm going to talk to on these shows that, what they're talking about works every day. If you do these
Yeah,
things, you might not win every day, but I have no doubt that the 10 steps that you've put together are going to prepare a trader to have a more successful day. And that's all we can
thank
do
you so
here.
much. Yes, thank you so much. And I think this is a really great start. If you want to go deeper and really start building that awareness, I would absolutely encourage you to download the or to subscribe to the free email series. And I think there is the QR code,
Yep,
Trading Mindset Tips.
there is.
And then you will get emails every day for 2 weeks from me that will walk you through 3 steps of the mindset transformation and give you clear actionable points to actually implement into your process that will help you to build awareness, to discover your narrative, like how do you talk to yourself, and also shift your mindset towards the mindset that you need to be consistently profitable.
Thank you so much for coming and joining me today. I know I took you way longer than our normal time here. I
I did not even
appreciate you.
notice.
I appreciate you giving us this time, and we will see you on Wednesday. And thank you so much. Good trading out there today,
Thank you
everybody.
so much, Howard. Thank you,
See you
everyone.
soon.
And see you. Bye.